relevant to, related to exactly how important this has been socially for us, and as we've discovered today, how key this is of a piece on social responsibility. Michael Zollerman is the director of Responsible 100. He's going to, alongside his panel, tackle some tricky issues of corporate tax avoidance. These issues have been a primary ethical concern for the public for years, and we see that concern escalating recently. Will business always seek to game the rules to their advantage? What's better, fair, more transparent, and how are we going to achieve that? Michael leads this hopefully lively discussion on the importance of businesses increasing transparency to regain public trust. Michael.
Thank you very much indeed. As we heard just then, as we heard at the beginning of the day, for those that are here from Paul Moynihan, about the ethics and the fair tax mark, it's a burning issue, a top issue. The Institute of Business Ethics says it's the most important issue for the UK public, and it has been for a number of years. I've got questions. I hope you've got your yes/no cards with you. The question, there's a few. The first question is, are you responsible for CSR reporting or CSR output in your business in some way or other? Are you currently reporting on tax as part of that CSR output? For those that have got a no up, do you imagine you will be in the next 2 years? Okay, that's fine, thank you. So we've got a brilliant panel here. We've got a large corporate represented by Bianca on my left. In the middle there is Tim. He's a consultant and expert on tax, and he's going to be a sort of a referee and help me in the case that Bianca and Matti fall out on some technical point. I'm going to refer to Tim. I am a generalist on responsibility issues, and I'm a jack of all trades and expert of none, really. But I've got a passing knowledge of the various issues that goes into tax transparency, responsible tax, having created a question for Responsible 100 with Tax Justice Network over many years. But I'm not an expert, so please don't get too technical for myself or perhaps others in the audience. Bianca Shead, Senior Manager Policy and Advocacy, SABMiller. Bianca has been at SABMiller since 2008, initially leading sustainable development communications before moving to her current role. Bianca has been in the brewing industry since 2003, starting out in Burton-on-Trent. Before this, she was a broadcast journalist in the East Midlands for the radio group that has now grown into Capital Radio. Tim Law, Director Engaged Consulting. Tim spent 20 years in the FTSE 100 as a tax professional, including Anglo-American PLC, where he became a leading expert in tax transparency, tax strategy, and stakeholder engagement. Tim was recently voted 5th in the Economia 50, most influential commentators on finance on social media, and now advises large businesses on tax transparency, governance, and policy engagement at an EU and national level. Dr. Matti Kohonen, Principal Advisor, Private Sector, Christian Aid on the end there. Matti leads Christian Aid's advocacy efforts towards the private sector in the Public Policy Department. He holds a doctorate in Sociology from London School of Economics with a case study among Ghanaian social enterprises. He has worked for a number of years in international development before joining Christian Aid in September 2014. Matti, please start us off on our discussion about tax and CSR, in particular, how tax has got onto the CSR agenda.
Thanks, Michael. I think that conversation goes back more than a decade, and actually today marks a day when that conversation happens on Trafalgar Square, where you will see an island of shady being put up for the occasion of the Anti-Corruption Summit, which is taking place today. Dave Cameron brought together world leaders, won't go too much to the agenda of that summit, but just to say that does highlight how the issue of tax has emerged from the back room to Trafalgar Square as of today. And 10 years ago or 15 years ago, tax was something which, as activists on student campuses, we were talking about as an injustice because developing countries were losing money as a result of tax havens being used by investors or by businesses, or indeed, as we've seen in the case of Panama Papers or Swiss leaks, banking institutions are able to hold assets of wealthy individuals in tax havens and pay too little tax. So it did emerge from a politics of questioning what the tax system is and does it deliver for society. It has then emerged as an issue of the mainstream development agenda. We've seen that with the Sustainable Development Goals. We've seen ambitious goals that been addressed last September in New York, and those goals need funding. And there was a summit a few months before the New York SDG summit in Addis Ababa in Ethiopia, which addressed the financing for development gap for the Sustainable Development Goals. Estimates say that it's about $2.5 trillion. That's an estimate, that's an underestimate of course, but it shows that we're talking about trillions of financing that gap. A lot of that financing will come from tax. Tax is essential for developing countries. If we look at African countries, on average, they're raising 15% for GDP in tax. OECD advanced economies raise 35% or more for GDP in tax. Tax is essential for paying for health and education. Of course, we need private funding, we need private financing for other aspects of SDGs, such as infrastructure and creating buildings such as this, and many more places. So it did emerge as a development issue, and tax inherently, then if we go to the subsidy of tax, why tax itself is a moral issue? It's because there's lots of choices in how we pay our taxes. Not as individuals, when I buy something from a supermarket, but when companies pay taxes, companies can structure themselves. Companies are taxed on the basis of the separate entities that form a corporate group. There may be 100 or more of separate entities that form a large multinational. Nothing wrong with that. But then if you look at the complexity of that multinational and how it then goes about paying tax, we see a headline figure that a company paid, let's say, 18 billion tax in Ghana. We wonder as campaigners, is that the right amount? Was that at the right time? Was that the right place to pay tax? And we hope that is the right amount, but we're asking companies to be more transparent about the amount of tax they pay in every jurisdiction where they operate. So because tax comes at the very end of your supply chain, if you like. It's what happens after you've provided the good to your customers. It's what happens at the very end of your transaction, really. We hope as campaigners that it wouldn't be a consideration of cost minimizing, but it would be just the right amount that you pay. And you worry more about your business than you worry about how much tax you pay at the end of it. Unfortunately, tax is something that can be changed as a result of how you structure your company, where you place your intellectual property, where you place some of your assets, your management, or how you structure your financing. All of those have tax implications. And tax sometimes is the leading motive for placing financing or intellectual property in a low tax jurisdiction. So I hope I've kind of went through the few areas where tax is a CSI issue. I think for companies specifically, it's a CSI issue because some of the risks have materialized. I mean, for SABMiller, there was a report a few years back by another UK charity, Action Aid, about whether SABMiller was paying the right amount of tax in the right place. FT, if you read it, almost every day you'll see a company or an individual being asked about their tax affairs. The Prime Minister was asked about his own tax affairs, that these were his personal tax affairs, and whether they were correct. And so it's a reputation issue, I would say, at the very end. So being a development issue, being a moral issue, tax itself is inherently flexible, given the international rules we have now. Of course, we try to change those rules, but those rules still remain flexible. And third, because it has materialized as a reputation issue. And what we ask as NGOs is more transparency, more clarity about how companies pay tax, be upfront about this is how we manage our tax, this is how much tax we pay in every jurisdiction where we operate, and some sort of a story of why you think that that's the right amount of tax. That would then start to regain public trust.
Fantastic, thank you. Bianca, some sort of story is where Matti finished there. Are you, what is the SAB story? Can you follow on from Matti in as far as give us some overview of where you think we got to with this as a responsibility issue?
Yeah, sure. My last question first, which is how many people come from organisations which cite somewhere in their values transparency, honesty, openness? Yeah, right. In which case, tax is a CSR issue because we should be transparent in everything we do, not selectively. But to give you a feeling of what it's like inside the company, when tax rises up the agenda and becomes a CSR issue or a more mainstream issue, two things happen. The first is, as Matti described, it comes out of the back room and these little mole-faced people who have never seen the light of day before come blinking into the sunlight in a state of shock. They have you've acclimatised. But it does. At first, these are people who at no point during their extensive training have been told to think about development, have been told to think about a narrative. This is all completely new to them, and it is really uncomfortable. They have not been media trained, they haven't been trained in communications. These are people who deal in absolutes, in numbers and in rules, and in putting the two together to make something add up at the bottom. The second thing that happens is that people like me, people who at the third sitting of GCSE maths hoped that this would be the last I ever had to do with that kind of thing, and I was equally blinking and terrified, being faced with concepts and numbers and things that I really haven't expected to deal with as a communicator, as a sustainable development professional. So from both sides, it's a bit of a shock. And what's important is that you take the two competencies, the two expertise, and bring them together. And then, gosh, I've never spoken to people in our tax team for years. And now I count them amongst my friends and people I speak to on a really regular basis. But it's very much a journey. It doesn't happen overnight, and you have to come together as two teams, two departments, two groups of people, and learn from one another quite quickly. And one of the important lessons of the tax team is please make it simple for me to start off with. And it's fascinating, so things that I'm enormously comfortable with, and going out and talking to people, for somebody who's sat in a tax team for the last decade, is enormously difficult. And you can help them and coach them and guide them and make it comfortable for them and take some of the, so they take the fear out of the complexity of the numbers for me, and then my role is to help them understand why this is important and that it's a really positive and exciting thing to be engaged in. I think that where we are now as a business is there's a huge amount of enthusiasm for how can we be more transparent, what's the next step for SABMiller, how can we take it a step further. So it's really difficult at the beginning, but it gets quite exciting, and if you really have transparency and openness, and you really believe in the values that you set yourself, then it feels like you have an opportunity to push the boundaries and demonstrate an even greater level of transparency.
You have a good relationship with Matti and Shead and Oxfam. Along with Christian Aid, they work quite closely together on tax and tax reporting, but that wasn't always the case. So 5 years ago, I mean, you put SABMiller and tax into Google.
It's not always flattering.
5 and 6 years ago.
Yeah.
So I wanted to ask you particularly about that. You seem to have gotten quite a journey. Initially, it was a bit of a shock, and now you find that you can explain yourself, and you do want to explain yourself.
And what was useful about that was that we perhaps didn't realise that people were interested, and therefore we weren't in a position to give people the information they wanted. It was in a format that would certainly I couldn't have interpreted for anybody. So understanding that people care about it, they want you to translate things into a meaningful and approachable set of data, but also the story. If you don't tell your own story, someone will tell it for you and will probably get it wrong. Therefore, taking ownership of that, and it's absolutely impossible as a large organisation to say, that's not fair. You can't say that. So what you have to do, as I say, is take ownership of it and really be open. And in talking to organisations like Christian Aid, we've been able to say, in a confidential, in a safe environment, say, look, this is what we have to share with you. Can you help us unpick it? Can you show us elements of this that are a red flag to you that we don't even appreciate as a red flag? And having that kind of candour in the relationship, in a safe place, allows you to unpick it and understand what different audiences want to see.
Tim, at some stage not so recently, you emerged mole-like from some dark room for the number crunchers. Could you give us your little bit about your background and story, because I know it's distinct from the other panelists.
Yes, absolutely. Thank you very much for those introductions. It's very bright in here. As has been said, my background is as a tax professional in the FTSE 100, having spent over a decade with Anglo-American working on issues of tax transparency and country-by-country reporting of tax numbers. I now run my own consultancy advising large businesses, mostly FTSE 100, on exactly those issues around tax governance and transparency. And I think it's testament to where the debate has gone to over the last 5-10 years, that there is actually an industry of looking at that as a standalone issue. But maybe just rolling back a little bit to where this debate has come from. The issues around businesses getting better at talking about their tax has been here for over 10 years. And it really started in the extractive sector, primarily in the mining companies, because their relationships with their host governments are fundamental to their license to operate and their ability to do business. And tax is obviously an integral part of that relationship with governments, because it is the return that governments get for the extraction of a non-renewable resource. And so that is why this became such an interesting issue for companies in the mining sector. That, coupled with the scrutiny that those businesses have been under for much longer than businesses in other sectors, thanks to people like Christian Aid and others, looking at large businesses in the developing world, which are often resource-rich countries, and therefore the spotlight falls on extractives companies. That acorn, if you like, of the tax transparency agenda was then fueled by a number of things over the last few years. Partly it's a number of very high-profile cases that have come out. And I don't need to name those. You can look on the front page of just about any newspaper and we see them on a regular basis. But it's also been fueled to an extent by the global economic crisis and the impact that that's had on government's ability to generate tax revenues, and therefore the scrutiny that governments want to place on the taxes that businesses are paying. And also a changing world. Technology has significantly changed or invented what a lot of businesses are now doing since the tax rules that we currently have to operate with were put in place. So there's been a dramatic change in the way that businesses operate, but there wasn't a mirroring of that in the way the tax rules worked. So what has that led to? Some people have described it as being a tidal wave of tax reform or tax agenda coming at businesses. I actually think it's been, the analogy has been used earlier this afternoon, it's more like a perfect storm, in that businesses and civil society organisations have found themselves swamped with initiatives coming from all directions. We've seen a lot of work at the OECD, the BEPS process, which is about trying to reform the international tax regime to better meet the way the world is today. We've seen it come very strongly onto the agenda of the EU, with all sorts of proposals, including the latest ones, which is the EU take on country-by-country reporting. And we've seen individual countries taking unilateral action to try and address the tax agenda, such as the Google tax in the UK. And one of the most tangible, I suppose, pieces that we're seeing very soon is the new UK requirement which comes out as part of the finance bill that we expect to get royal assent in July of this year, which will require all large businesses with a large presence in the UK to publish a tax strategy, saying what their appetite for risk is, what their approach to tax is, how they manage that approach to tax. So what we've seen over the course of the last 10 years is a move from a place where tax was really about a small number of sectors and a small number of businesses making some voluntary disclosures about their tax behaviour, through to a place where now it is soon going to be a mandatory requirement for a large number of businesses. And then there's an awful lot of businesses that sit in a place in between, who are kind of starting to get to grips with this agenda, but are a long, long way behind the curve of businesses like SABMiller, for example.
The situation, as far as you have a relationship with SABMiller, is this Christian Aid directly work with SABMiller? I wanted to talk to you, I wanted you to tell us a little bit about, from your perspective, how partnership with corporates has developed, how it's changed, and how it may continue to change in the future. I'd like to get your perspective on the partnership, working with, campaigning against, challenging, but working with the corporates, Matti.
So there's really two ways in which we see the agenda developing. One is changing the rules, and we have a lot of advocacy to look at, are the rules right? And if you say that we're swamped by initiatives, actually we've been instigating and putting those initiatives on the table for the last decade or so as civil society. So many of those come because we think they are the right things to do. So having a greater amount of public disclosure through regulatory means has been something we've been asking for, and then changing the rules at the OECD level to make it harder for companies to shift profits or pay tax at the wrong place at the wrong time or too little tax. And we've also worked to establish better international rules at the United Nations level, because believe it or not, many developing countries are not at the table when the international tax rules and tax treaties are being decided. So tax rules are decided by the OECD, and that doesn't represent developing countries. So that's been a large. The second part of our work is to look at behavior change. A lot of the issues around tax is about behavior and how you respond to rules, how you start to internalize practices around the rules that are set by different governments in different jurisdictions. And this is where our conversation with SABMiller started. We don't have a formal partnership of that sort, but we often have private dialogue, and we have had events and conferences where we've shared many times platforms. So it's that type of exchange of ideas and exchange of ways of working and making recommendations along the way that we've been, I think, engaged for about a year and a half, if that's about correct, since we met around, we were planning a report at that time about looking, so what would good look like? So we were thinking of what does the behavior change piece look like on tax? And it was a question that SABMiller indeed asked, tell us something we should be doing, and we made a report called Getting the Good, and with ActionAid and Oxfam here in the UK. And that really, for us, launched us into the sphere of talking about tax in a corporate responsibility context. And it said that tax is a risk for businesses, but it's also a huge opportunity to do the right thing and to profile yourself towards the public as a responsible and a transparent actor who cares about the matters such as financing SDGs and actually financing climate change. You need money as well from public sources. And so we really kind of put that forward. And since then, we've had quite a few dialogues. We ourselves have been part of a number of them, such as Responsible 100, which Michael organises. It's a kind of a closed-door dialogue that Michael can maybe tell more about. Common Vision, COVI, I don't know if anyone's here from COVI, they've had quite a few dialogues. KPMG was sponsoring the dialogues as an accountancy firm, which itself is, of course, heavily implicated in the whole industry of tax and tax advisory and tax accountancy, and mentioned a few times in the different leagues. Tax dialogue is something which NGOs we started. So to see, can we have a structured dialogue about some of the key issues? Are we even talking about the same terms? Because we talk about tax havens and corporates talk about corporate structures. It's like, yeah, but where are your corporate structures? So we have to find a similar terminology, and that's why having a closed-door dialogue at the stage and then an annual public conference is something which happened first in Denmark, and then we brought it here in the UK, and we intend to continue it here. It's to kind of see, can we move the industry step by step forwards by having some of the front runners on panels and telling some of the laggards to say, here are some of the ideas which we've done, and it hasn't hurt our business. If anything, it just creates better trust and better kind of ways of working. And then to mention the fair tax mark, really important that there's a consumer-facing mark that was mentioned here earlier, and that can showcase that a company is meeting those standards. But we ourselves don't set standards as British companies.
some stage you went from being going on the defensive, I imagine, responding to criticism. I've retweeted something from the campaigners today. They've got the bankers with the bowler hats on the desert island on the deck chairs with their money on holiday in Trafalgar Square this afternoon. I've tweeted that. People want to see the picture. The campaigners are doing something similar with SABMiller 5-6 years ago, and then you went from that defensive into some sort of dialogue and discussion, and now you have a relationship. Now you're confident and indeed cited as an exemplar on some of these issues. Can you tell us a little bit about that and where you think we can go from here?
So just to reiterate that whilst it was not much fun at the time necessarily, having campaigners outside the office, it's really hard actually to not take it personally. And I think that that's something that in various discussions we with a number of NGOs that we realised that it's not institution against institution, it's people talking to people, and once you get to that level, conversations are so much more productive. But in retrospect, it was useful because it highlighted the fact that people want to know, and it just hadn't occurred to us that people wanted this level of transparency. And it was, I'm trying to articulate the journey in a positive way. It was really uncomfortable at first, and the tax people, sorry, the tax team struggled to understand, particularly perhaps, why a development NGO would be interested in how much tax we pay. And so for us, it was really important to make the connection. And I think that it's one of the challenges is taking something which can be quite emotive and something that is sort of the concept of fairness and justice, and marry that to something that sits in spreadsheets and is very, very highly regulated, and bring the two together. So an important part of the journey was making sense of those two very, very different angles. And I think, and the reason I'm slightly struggling is because I don't want to say we were on the defensive, because we weren't. We were perhaps on the back foot, but and we did not agree with everything that was said, but at the same time we realised that there was an opening to do a whole lot more. And it has been very much incremental, but now, 5-6 years down the line, we see it in a completely different light, and as I said to you before, we feel quite joyful about it, because for anyone who doesn't know, SABMiller has a large developing market presence, and the link between tax and development is obviously now very, very strongly made at a mainstream level, and the mobilisation of domestic resources to fund the SDGs is top of mind for everyone, and we are completely supportive of that, and we see the connections, we see the link. And in the same way that I think within SABMiller we try not to consider sustainable development as a bolt-on, well it's not, it's part of the way we do business, it's embedded into strategy, it's embedded in the annual business planning process, and tax and development is a critical part of that now. So it really is on the mainstream agenda.
Fantastic. I'm going to open out to questions in just a second, but Tim, I'd like to ask you first. Some slight dissonance for me with these different organisations being very close and in a great deal of agreement and enjoying a positive relationship with each other, sort of suggests that maybe we don't have a big problem with tax and business after all. Have you got? Can you give us some sense of if this is sort of a normal sort of relationship or what?
Absolutely. So maybe if I can explain what I see as the range of positions that businesses are taking now, but then also reflect a little on where I think that's going to go over the course of the next couple of years. So what might be important to those people who aren't where they need to be on that scale. At the moment, clearly there are some businesses that have really embraced tax transparency and talking about their story on tax. SABMiller is an exemplar of that. Others out there are mining companies, so Anglo-American, Rio Tinto. There are a number of businesses that produce a standalone report about the way they behave and their tax behaviour, and some numbers to support that as well. At the other end of the scale are businesses who, as things stand, only disclose that which is absolutely required of them by law, generally by accounting standards. And in between the two, there is a sort of sliding scale of businesses that disclose something about their approach to tax, maybe make some statements about, you know, complying with the law in the jurisdictions where they operate and words like that, but don't really embrace the challenge that there is and the opportunity that there is to talk about your business and the way that you operate. I think that over the course of the next 2 years, we are going to see that fundamentally change, particularly here in the UK. Now, it's worth noting that there is a difference in behaviour also geographically. So generally, businesses in the UK are taking a more progressive approach to this agenda and being more transparent and more engaging about their tax. Partly as a result of the presence of civil society organisations in the UK, partly as a result of the sorts of businesses that actually are headquartered here, but also a number of other issues. Down from that, we see businesses in the EU who are under an amount of pressure from work that's going on in Brussels to be more transparent about their tax affairs. Probably at the other end of the scale, US-based multinationals who are still very much behind the curve in terms of the approaches that they're taking to being transparent about their tax affairs, which is ironic, given that a lot of those are the ones that have really been in the spotlight. Where this is going to go? Well, first of all, those UK businesses that haven't yet stepped blinking into the light to turn it back onto businesses are going to have to, because there will be a requirement for those large businesses to, at the very least, publish their tax strategy within the next couple of years. Now, to my mind, it doesn't make sense for a business to just do that. In the same way that in any other area of CSR, you wouldn't just publish the raw data that is absolutely required of you. You set it in context. You talk about what it means to your business. You talk about what you're doing to impact on that, whether it's climate change or water or whatever it might be. You won't just publish the data, you'll actually talk about your story. Tax is no different. So what I think we will see over the course of the next 2 years is more and more businesses learning to talk about tax. And I thought your example is absolutely right about the challenge of tax professionals, and I am one, so I can agree with your assertion, and communications professionals who are not deeply knowledgeable about tax issues, but are often put in the front line to have to talk about them. Because if you are let's say you're a government relations expert, and you are in a meeting talking to a government about new entry into a country where you may not have operated before you get out of that meeting, a question about tax will have come up. And people will be looking at, well, how's this company behaving? Generally, across all of the different areas of CSR, and one of those will be tax. So I think this is firmly on businesses' agendas now, and it has to be. There's more and more scrutiny coming from not just boards, but also audit committees, who see tax risk and the reputational risk that comes from allegations over tax behaviour, and it only needs to be allegations, is so significant at the moment that it can't not be on businesses' agendas.
You used a nice line previously. It's not just about opening the books; it's also about telling the story, which I quite like. So, is that something you just quickly, sort of quick response? Is this something that you find businesses respond to? Big businesses that you talk to, they respond to that, they get it. Some of them may be more ready to embrace that than others, or are some of them still freaking out with the idea of opening those books on tax?
It's some and some. So there's some businesses that immediately get, actually, we need to talk about this. Yeah. And there are others who are still responding with, when there's an obligation for me to do it, I'll do it. Yeah. And I think that's that.
It's a missed opportunity.
It's a missed opportunity.
Yeah. And somehow Google and Facebook and Apple are all immune, despite
well, there's less pressure on them at their headquarters position, because the US hasn't grasped this nettle in the same way that the EU and the UK particularly has. However, The new rule around publishing a tax strategy applies to multinationals who have a large presence in the UK as well as large UK multinationals. So that will, to an extent, bring some of those businesses into the scope of having to address this issue.
Fantastic. With people with microphones and people with questions.
Michael, two questions, okay? We have to.
I've got 5 minutes, 33 seconds here. Let's see what questions we get. Anyway, there's one here, and there's Adrian up there in the brown jacket.
Hi there, I'll try and be quick. Oh, can you hear? Yeah.
Yes. Where are you from, please?
I'm Harriet Kelsall from Harriet Kelsall Bespoke Jewellery. Very interesting hearing what you're saying about turning taxation into a story. We currently don't report on our tax because we're a really small business and nobody asks us to. We've got no problem with reporting on our tax. We've got nothing to hide. We just kind of pay it, basically, like everybody should. So my question is, I often think that independent businesses like mine can and do and should lead the way. What can we do about that? I mean, if I publish a blog saying, "Hi everyone, we pay tax," I mean, that's a bit weird, isn't it? So what can we do?
Can I get the other questions in, please?
Okay. Hello. Adrian Henry is Middlesex University. A question on tax policy, which you haven't really addressed. At the moment, an awful lot of tax, and certainly the issues around tax, are around corporate tax, which is based on taxing profits. I would like to get the panel's view on whether, if taxation were primarily based on the work done, so it was more akin to value-added tax, how far do you think that would address the problems that we have with tax at the moment?
Who would like to take that last question? Yeah, Matti.
Okay, so there's of course, when tax avoidance is so simple, there's people who ask whether we should then abolish corporate tax and just do away with it. I think you're alluding to that sort of question, or whether it's double taxation when you tax dividends and you tax corporate profits. I think corporate tax is a very important part of the tax mix. In developing countries, it's 15% of the overall tax revenue. In OECD countries, about 6%. It's gone down over many years, partly because tax rates have gone down due to international tax competition, and also it's become easier with the internationalization of businesses to pay less tax in the UK, I suppose. Corporate tax is important because if you take it out, you will see more employees shifting their employment into companies, and therefore they'll be eroded through other ways. And if you don't keep corporate tax, I find corporate tax a good pro-business tax. If you think about it, you only pay tax once you make a profit. So you're allowed to invest, you're allowed to develop something new, you're allowed to innovate, and once you make a profit, that's when you start paying tax. So it's to me, it's a really pro-innovation and pro-development type of a tax. And that's why I think it's a good part of our overall tax mix. On SMEs, what you can do, you can put out a statement and say, we feel that tax is a very important issue to society, and say how much tax you pay in every jurisdiction where you operate. If you only operate in the UK, give us a breakdown of about 7 factors or 9 factors that the OECD asks for large companies. You can do it as a small company. It probably takes you half a day at your tax department, I would guess, but Tim might say how long it takes to do the OECD template. Or there's also consumer-facing marks, such as the fair tax mark, which you may use in order to communicate it quite quickly that you're a fair taxpayer.
But I think I'd like to add to that, because I think that coming from a communications perspective, it's part of your bigger story. So presumably you employ people, you use infrastructure, you turn on the tap and water comes out, you use energy in the creation of jewellery, and it's putting it in the context of that. The taxes you pay help to fund the infrastructure upon which you rely, and your employees and the people who buy your jewellery, they all rely on that. And once, and this is part of the challenge with a whole company mindset, is once you make those connections and you realise that the direct impact and the indirect impact of all of these things, you start to build a picture, a coherent picture which makes sense to everybody, whether it's the people who buy your jewellery or the people who collect your taxes.
I don't have much to add to that. I think that's absolutely right. I think it is obviously more challenging for a small business to find the right way in which to engage and give that message. But I think it's absolutely right. It's just part of the broader message that you would give around any other aspect of corporate social responsibility that you have embed within your business. You embed the way that you behave towards tax into that as well.
I've put some literature from you alongside the Responsible 100 propaganda there, Tim. What was that?
So that just sets out some more details of the new rules coming out in the UK around publication of a tax strategy. So I'd encourage anybody who wants some more information about what those new rules will entail for businesses in the UK, do grab some literature there and read.
I've got 19 seconds left. I'm afraid we're not going to get to your question. I'm probably in enough trouble as it is. Harriet, you can also answer the Responsible 100 tax question, of course. We're having our tax roundtable on the 26th of May, and some of these people I think will be with us in that meeting, and there's a couple of seats left to answer our tax question. Shameless plug. So please join me in thanking these fantastic panellists, Matti Kohonen at the end, and Tim Law and Bianca Shead. Thank you very much.